swing here. We're on a daily time frame now. We got this big swing, which is this big sequence here. Why is this one important? Because it's the last major bearish swing that we had, and it started in 2022 in March, or I think it was February even. Let's see. Oh, it was March, yeah. So, and since then we've been on a bearish move, and since November of 22 we've been on a very bullish move. All right. Now, first, to understand where we are on this bullish move, we need to understand where the levels are for this bearish move. So we pull out Fibonacci as we always do. And I've been getting some questions on my strategy, how I trade. Watch this, because this is a big part of my strategy. So first off, to understand where we are at this sequence, we need to understand what are the levels of the previous sequence. So we see the levels here. We have the supply zone here, the 78.6 Fibonacci retracement until the 88.6. We have the sweet spot here, the 50% to the 61.88%. So sweet spot, supply zone. That's the important zones to remember right here. Okay. Now this here shows us where we are from the previous drop. And it shows that we've been inside the supply zone trying to break through, but it didn't happen. In the same time, I want to bring out the 2000 level. Why is that? Because it's a significant level that we've been trying to break out several times and haven't succeeded. We broke through and got right back underneath again. I'm gonna show you what I mean. So yeah, you guys see, we broke through, boom, dipped straight back underneath, came back up, tried to break up again, but it didn't happen. Same here, broke above, got dumped right underneath again, tried to break up again, didn't happen, tried to break up again, didn't happen, came close, dropped, and now we're here again. And I've been saying that this is the time that we're going to break it, but we have seen the resistance, we have faced the resistance, and we might do something like this. First, I actually think this is going to happen. I think we're coming into the sweet spot zone once again, and then we're going through. So back to the bigger picture. All right, so now we see this. We see the levels from the previous drop. Now we have this sequence, we have this drop, and we have this sequence. All right. We start with this sequence here, this bottom. And I make these lines thinner to distinguish them. So the thicker the lines on the Fibonacci, the bigger the swing that it comes from. So when we pull in this fib out, it actually doesn't give us so much. It only shows a very strong confluence down here. We get the 50% fib from this swing correlating perfectly with the, I don't even know what that is, with the 38.2 Fibonacci retracement on the big swing. Interesting. Okay. Now it's actually 23.6 Fibonacci retracement. All right, cool. To be honest, this one didn't give so much value for us. It only gives us a level, a target, where I see this market coming to, which is the 27.2 fib retracement. So after we've done this drop, I definitely think we're coming up to see 2052. So we have a major climb. Like, let's say it does what I think it will do. It come down to the sweet spot zone, which is down here. So let's say it comes down here, and from here starts climbing up to the 27.2 Fibonacci retracement, or extension, sorry. That is 2,000 pips. 2,000 pips. It's not a bad move. That's a major profit. That's a funded account. So That's that. But I'm gonna remove this one for now because it's not relevant right now. We want to see what's happening right now. And to do that, let's check the last drop we had, and that's this sequence right here. Let's go on the 4-hourly time frame so we can zoom it in a little bit. And let's check it. All right, so this is interesting. So this drop, this sequence here, if we look at the 127.2 Fibonacci extension of that sequence, where is it? It's exactly where the at the 2000 mark. This is why we see so much resistance here. Market is trying to break above, but it doesn't manage to stay above, and it's now falling down again. How deep will it fall? That's what we will look at now. I think we have a sell bias. I think the gold market is due for a little drop, and that drop needs to come down at least like somewhere around here. Why is that? Because this is a zone with a lot of liquidity. There's a lot of unfilled orders here that needs to be filled. So I can see the market coming down here, but in the same time, this is the thing, and this is what I wanted to talk about. While the technicals show that we should drop, the technical shows that we should do a drawback when it comes to gold. We've been moving up for a while now, for a minute now, and we need to come back down and fill some liquidity. We got a lot of liquidity here, here, here. Like all these needs to be filled, but while the technical shows that the market needs to come down and do a healthy drawback, the fundamentals shows that the gold should run, like it should run to the moon right now. So why is that? For y'all that haven't been on the streams before when I've been talking about it, is because we got a lot of countries. We got Turkey, we got Russia, we got China, we got a lot, and like there's a lot of countries that are accumulating gold right now. They are selling off the U.S. Government bonds. They're selling off they're selling off U.S. dollars, and they're buying gold instead. They're accumulating gold, and this shows also that people are, and countries, regions, banks are losing trust in the U.S. dollar. The U.S. dollar will fall, but when it does, gold will rise, and this is what's happening now. So countries are accumulating gold because they are afraid of the dollar. That's how the US dollar looks like right now, but let's stick to gold. So with that said, all right, cool. We know now that we are just outside of the supply zone. So this is the supply zone of the big swing that we were talking about. And we just broke through it. We are underneath it. We just broke below it. What does that mean? That means that, wait, let me do it like this. All right, cool. So, look, this is the situation right now. So I showed you that we are in this big supply zone from the first big swing, the big drop that we had, and this supply zone is a very, like the 78.6 Fibonacci retracement here is very important. Breaking below it shows that the market wants to drop. So what it's doing right now is it's retesting it. As broken below, and now it's coming back up and retesting it. And we'll see that when we look on the hourly time frame. So let's zoom in a little bit. So I've been waiting for the price to come all the way up here. I want to see it come all the way up here. Test the 73 as resistance. I mean the 1973, of course. Price level. Test it as resistance for another sell. and that would put us in a sell position, and it's a juicy sell. We got a lot of pips to catch, because the next level that I see this coming to, well, next level is here, but then it's down here to the demand zone, and that is 200 and almost 240 pips. It's nice. It's a very nice sell. So this might play out anytime today. I will want to say during this live stream, but we don't have so much volume in the markets right now, so I don't know if it's going to play out during the live stream, but within an hour or two, hopefully. And this is how we're going to set the targets. TP1, 1968, 1968. TP1. $19.69. Yeah, that's where we put it. TP2 would be 61. That's a very big TP2. Let's see if I can make it shorter. All right, let's see why we got so much support there right now. You see I know it gets kind of confusing with all these lines, but you see the dotted lines? That's from this last swing up here, this smaller swing, and you see these dotted red lines is the demand zone, and you see that the lowest line of the demand zone, which is the 88.6 Fibonacci retracement, is perfectly correlated with the 50% from the sweet spot of the bigger push, of the bigger sequence. Correlate perfectly, and therefore we got very strong support here that the market is trying to break through right now. Let's see if it manages to do that. But as I said, I want to see this retest first. So what I'm hoping for is bounce up, retest, and then we're going down. If you're impatient, and of course you got to trade here as well, but this trade here is risky because it's easy for the market to start going in the right direction and then we'll go up to contest this resistance as mentioned before. And as I said, I never call out any trades that I don't believe in, so we rather go for quality than quantity, right? Yeah, so the funny thing is that I would place the TP2 here. That's a big TP2. 61. That's a big TP2. Then we're coming down here, clearing all the liquidity down here. Damn. Like these candles are crazy that we've been seeing lately. So much push, so much liquidity coming into gold. All right, let's keep going with this. thing is, I would need to put this one here. We gotta have something more along the way. $55.4. And last TP. Put it. I will leave it open actually, the last TP, but we can have on approximate number of about 1943. Yeah. And the stop loss, of course, most important. So we go in at about 1973. I will want to put the stop loss at about, yeah, at about, shit, that's a big stop loss. We don't like this big stop losses, but sometimes you have to. $77.7. We got big move. Why we're doing this bigger stop loss is because we got this big move, and until this big move happens, we might see the price play around a little bit in this area here, allowing for a lot of scalps to happen. But for this big swing move or day trade move that we see in here, we need to have this bigger stop loss. So it's a stop loss of about 48 pips. So be aware of that in your risk management. Always remember proper risk management. 48 pip stop loss. So it puts us about here, 77.7. That's that. Let's make an entry as well, so we see that nice and clear. And we can type this also. This is 40, 47. Oops. All right, this is what we're looking at. Let me send it out in the Telegram channel. If you ain't in the Telegram channel yet, then you better join it. So you are up to date with all the trade ideas and updates on the trades that's going on.